They're meeting next week, and we already know that they're not going to do anything. But they are going to give us some guidance. They are going to give us a new forecast, and we'll get a press conference. And so it might help set the tone as to, when we heard from Chair Powell last week, he said it just need a little bit more, just a little bit more progress to confirm they're on the right track and build their confidence before cutting rates. That doesn't sound like a very high bar. But if we get a setback in inflation, he might sound a little, more on the stern side versus on the hopeful side.
And now your inflation report for the day, in that I follow carefully the lodestone of my house, which is the price of dog food. What it costs to do vet bill and kennel fee up with a proper fancy Upper East Side dog food has gone from $28 to $44 over a good 5-6 pandemic years as well. Julia Coronado, an update from Dr. Coronado on the CPI.
Look, we have made a lot of progress, but in the first quarter of the year, we often get some firmer prints. We saw that in January. We are going to see probably a little bit more of that tomorrow in the February report. We're looking for a 0.3 on core. That would still bring the annual rate down a couple ticks, but it would lead the 3-month annualized rate up. So it would be kind of neither here nor there, I think, in terms of the Fed. It would not be particularly worrisome because, year on year, we're still making progress, but it would also say there's no rush. And then you take that with the Friday employment report, I think that's going to matter more, Tom, the jobs data, if that shows signs of, the perfect Goldilocks labor conditions are starting to cool off a little bit, that might give the Fed more urgency versus if that continues. And I would say Friday's employment report, it was a mixed bag. The jobs number was strong, lots of downward revisions, and a pretty notable uptick in the unemployment rate. So, I think they're kind of in, we're getting closer to where those risks are getting balanced.
For me, it's not just about inflation in the U.S., it's about inflation abroad. I mean, this week we also see Brazil, Germany, India. I think at the end of the week we see France, Italy, Poland. I mean, Julia, talk to us a little bit about inflation dynamics outside of the United States.
Well, that's an excellent point. I mean, we have seen progress globally. And, it's sort of widely thought that China is now a disinflationary force, given how lackluster their growth is and how much capacity they have. So globally, we are actually in a much better place than we were this time last year. And it is across regions. So again, we're not back down to pre-pandemic, but we're certainly moving in the right direction. And most central banks, not just the Fed, with the exception of the BOJ, of course, always the outlier, but most central banks are considering moving off a very high spot rate so that, in acknowledgement of some of this progress.
Well, Julia, we also see inflation data out of Sweden on Wednesday. And as we know, the Riksbank might be the very first developed market central bank to move. I think the market's pricing in something like a 60% probability of a move by May. Forget about inflation, though. I mean, you mentioned Japan. I want to talk about Japan and what we're seeing in Japan ahead of this March 19th meeting. What do you expect there?
Well, look, Japan has been both kind of gradually pivoting away from its ultra easy stance, but very, very patient in doing so.
The G word.
Will we actually see a move? I am not the Bank of Japan expert. I think it's, they're going to keep evolving and rotating. Whether this is the meeting, I'm certainly less confident to put a stake in the ground on that.
Right. Julia, to get back to the data this week in retail sales, the consumer 68, 69, 70, 78% in my household of GDP is well. Tie in your GDP call right now with the actual retail sales statistic 3-month annualized that we've been seeing. The consumer is buoyant, am I right?
Well, we saw some retrenchment in the January retail sales. Remember, we saw a decline in core retail sales I would say consumers have really kind of gone back to their pre-pandemic norms in the sense that they're spending, they've
Right.
got jobs, they've got income, and they're spending. But what we hear, what we see in the inflation data, what we hear anecdotally, the Fed's beige book certainly shows that,
Right,
is
right.
that consumers are
Well,
price sensitive again. They
okay.
want a deal, Tom. They want a
Okay,
deal.
Julia, I'm running out of time. I don't mean to be rude, but the answer is it's Rude Monday. And
It's
the
rude.
answer, Dr. Coronado, is you're coming in with like a 2% real GDP and you pop on disinflation, and all of a sudden, are you modeling out a subpar nominal GDP?
Actually, we're kind of optimistic on the productivity side of things. So
Okay.
we actually do think that this productivity rebound is not just a one-off, that it's a better trend this cycle. So we've got GDP running around 2%, with a Fed funds rate at 5.5%. That's not too bad.
Right.
And it's also, the beauty of it is that it's
Right.
non-inflationary. So
Okay.
this is solid growth that isn't necessarily
Right.
inflationary. That brings nominal GDP slowly, gradually back down to the 4.5%, 5% zone.